Larry, I think in the last 3 minutes, and I have one more question for His Excellency at the very end, I'd be really remiss not asking you about surviving the turbulence we see today. We've had almost a 20% correction, inflation at the highest level in 30 years. It's not clear whether the Fed can manage this, the US Central Bank, to bring down inflation but not kill off growth. How much longer do we live with the turbulence, and are we almost through the worst of it? Does inflation come down naturally post-pandemic or not?
Well, there are many seeds of inflation. The seeds of inflation in the United States are really some structural issues related to immigration policy, where we have, the trend in illegal immigration has changed quite dramatically in the last 5 years. So we do have many labor shortages. We have rising wages. Our economic policy has moved away from consumerism to job creation, and so many of these things were structural seeds that were many years in the workings. And obviously, the pandemic has really showed the weaknesses of these efficient supply chains. And then obviously we have supply shocks in food and commodities and energy because of the Russian-Ukraine war. All that is leading to some really serious supply issues. If you study some of the earnings misses that came out this week from some major US companies, much of their problem has to do with supply shocks. It still is more of a supply-driven inflation issue. Demand is still a little lower than it was pre-pandemic. And so the Federal Reserve and other central banks are all going to try to arrest this inflation and bringing it down. And I do believe it's just going to take time as companies build out redundant supply chains, which I've written about. And this is very hard for any central bank to have the tools to arrest supply-driven inflation. They have tools to arrest demand-driven inflation. That's what they do. And so that's going to be the balance. How much do they raise interest rates that creates a reduction in demand and puts economies into recession? I don't think they're going to have to go as high as some of the future interest rate curve suggests. China is already in a recession by evidence of the most recent information. You do have many issues around the world. So the S&P has been reset. We were trading at a premium above a 30-year average in terms of the PE averages. We are now at the 30-year average of a price-earnings ratio for equities. We've seen the indexes do not really show the damage as you suggested, because energy companies are part of the index. They're up on the year, and you have a lot of tech companies down 50, 60, 70% down. So we reset many stock. The big issue is going to be E. In many of the companies that reported in the last 2 days, they reported that their margins have been really compromised by the supply shocks, and they were not passing on the same price increases despite how high inflation is. And so that would be the big issue. If one believes we can mitigate these supply shocks over the next year and mitigate some of these issues, then I would say earnings can resume to be strong. But if supply shocks continue over the next 12 months, we're probably going to have some earnings misses that are going to be continuing, which suggests markets have some more ways to go down. But as a long-term investor, these are great opportunities to buy. There are many cheap stocks now, but if you're a day trader, you may want to wait. But no one could pick bottoms, no one could pick tops. The reality is the market has reset itself. And I would say for those companies that you really believe have a bright, strong future, you may see those stocks going down a little bit, but I would suggest this is the time to start adding to your portfolio. We should always assume that it's not going to be a straight line. We should always assume we're going to have new risks. Now, we may not have ever anticipated the risks that we're facing now related to a war and a humanitarian disaster. But we are adapting, and we're all trying to move forward. And most importantly, we all need to be working together, country by country, to work together to create that proper decarbonization pathway, at the same time making sure that any transition is fair and just. And that means working with energy companies, investing in energy companies that may have a short period of time of return on capital. The bigger question will be, Is that enough? Do we need to ultimately invest in deep water? A big question there, and a lot of the NGOs would disagree with anything I'm going to say now. We have to just make sure, do we have adequacy in energy at the same, and to keep the world moving, to help the emerging markets at the same time, developing new technologies so we could leapfrog some of the hydrocarbon issues and really make, for instance, the emerging world to have its adequacy and power in a fair and just way.
Yeah, it's a good way of putting it. I mean, even during the COVID-19 pandemic, we were very slow to respond to the challenge of those in the developing world, especially Africa. Yasser Al-Rumayyan, we forgot to say that as a chairman of Saudi Aramco, what are you doing with ESG within that organization? I thought it was fascinating. They set an earlier target for net zero 2050. Share what the conversation is inside the company, because it has a bigger role outside of energy within the kingdom as well. How can they be a persuasive agent for change when it comes to ESG?
It's the ESG and the net zero policy that we have in Aramco is part of what we have in Saudi Arabia. So we announced that we will be net zero emission by 2050, and the country as a whole will be net zero emission by 2060. So it's like integrated part of what's happening in the government. And Aramco, of course, has taken the leadership in both strategic and operational approach to address the ESG. So the oil and gas industry has a role to play, and we have to navigate a more sustainable future for the oil and gas to be part of the energy mix. And it is actually, it will be for many, many decades to come. So the hydrocarbon products are the building blocks of the energy transition. And the problem I think that we've faced over the past few years is people wanted to switch on and off, from the carbon, the fossil fuel directly to the renewable energy. We just can't do it. It's a process like what Larry said in many events, including today. You cannot just turn on and off the switch from fossil fuel to renewable energy. So it's again a process that we need to take. So to achieve the net zero ambition isn't just a climate imperative, it's a business imperative. Aramco is in a strong position with the lowest upstream carbon intensity for major producers. So exploring low carbon energy solution, carbon, hydrogen, and cleaner fuels, the energy efficiency through technology, and our massive economies of scale, the future or further reducing our gas flaring. And we did that I think a decade ago, ahead of the industry.